Welcome back, you legends. I'm Dr. Khan. Let's get right into this video. So the stock market today, everybody, closed slightly down on the S&P, 0.8%, 0.6 on the Nasdaq, and 0.3% on the Dow Jones after putting in a face-ripping rally in the first hour of trading. In fact, we spotted that rally coming. This is the trading community, everybody. This is what it looks like. I'm at UTC +3, so 1 p.m. for me is 3.5 hours before the market open. And here's what we spotted. The dollar index 1 hour chart broke down from a double top with a negative divergence, trading below the 20 period moving average, appears to be forming a bear flag. Bullish for the Nasdaq and tech. Watch for confirmation at the open with a break below 112.7. A couple of hours later, I posted an update, dollar index update, 2 hour chart breakdown successful, should allow some reprieve for the stock market. And that's exactly what happened, everybody, in the first hour of trading. We had this face-ripping rally to the upside, hitting the 1 hour chart Bollinger Band, and then we saw massive selling. At the end of the trading day, everybody, we did form this really ugly looking bear flag structure, right? We sold off to the downside, and then we formed this bear flag. Now on the 5-minute chart, everybody, we do have this tiny teeny double bottom formation, right? A full measured move on this double bottom formation would take the S&P 500 back up to 368.5, which is a very obvious consolidation zone that will now act as a critical level of resistance. And so for Friday, I would not be surprised to see a run up to this target, a failure of the rally here, and a continuation of selling to the downside. Now, what is exactly happening? Why does the stock market continue to be very jittery and very nervous, extremely nervous? Well, yesterday, everybody, we had a really big piece of news drop. Liz Truss, UK Prime Minister, resigns after 6 chaotic weeks, igniting new leadership fight. Just a couple of weeks ago, actually, guys, I read somewhere that people were taking bets on when Liz Truss would resign, and more than 50% of people believed that Liz Truss would resign before the end of the year. And guess what? They were exactly right. Now, this global turmoil, everybody, is very bad for the stock market because it strengthens the dollar. When investors are fearful, when there's global instability, money floods into the dollar and the dollar crushes the stock market. Now, over the past couple of weeks, everybody, we did notice this very obvious double top formation in the dollar with a significantly lower high and a significantly lower high on the PPO as well. So momentum was bearish on the dollar and the price action was bearish, which was bullish for the stock market. And we did absolutely see that materialize in this face-ripping short squeeze rally, 7.5% in 4 trading days. This was a massive short squeeze. And we're now seeing this rally fizzle out as we enter the most dangerous time of the year for the stock market in terms of seasonality. Look at this, everybody. The last 10 days, the last third of October tends to be the riskiest, the scariest, the most dangerous time of the year for the stock market. We tend to see massive selling in this time period in all prior midterm years. And this is a midterm year, but it's a special midterm year. It's the first new Democratic president midterm year, and it's in a bear market. So the risk to the downside would be compounded. We cautioned about this in the last video, everybody. I still remain extremely cautious in the short term. In fact, everyone, we did close our short-term long positions on Thursday at the top. Thankfully, we got really lucky and we closed our positions at the top. We were long AMD, one of the best performing names in the S&P 500 yesterday. We were long this name because we found a very interesting and powerful edge to the upside that did materialize yesterday. Chip stocks, including AMD, Nvidia, and many others, did exceptionally well yesterday. And we did see that setup come in through a number of very interesting charts that I did share in the trading community. By the way, everybody, if you're interested in following my trades, I do post every single trade and investment that I make in real time in the trading community, as well as live market analysis, pre-market, intra-market, post-market, all of my charts, all of my technical indicators, everything I do is in the trading community. It's $20 a month if you go for the annual membership, and it's the best way to support me if that's something you want to do, and absolutely the best way to track every single trade and investment that I make and all of my work. So we were long this name and we did exit near the $60 level at about 59.8. So we did catch the top. Thankfully, we made some really nice profits on this name. We also traded another name. We traded Tesla after it reported earnings. It left this massive gap to the upside and we did manage to catch this attempted gap fill, this retracement back to the 5-day moving average, and again we closed near the top after I spotted a double rejection on the 10-minute chart right around this level. We took profits here, and so again we got super lucky with this one. This is what the trading community looks like, everybody. Under Money Time Machine, I post announcement, all of my trading resources and learning resources, as well as member exclusive videos, including a member exclusive video on how to set up this indicator, my own CPC put to call ratio buy and sell signal, which I spent a long time refining, and I came up with this variation which has been year to date 100% accurate in predicting and spotting stock market reversals. In fact, if you simply followed this singular indicator and nothing else, and you traded very conservative at the money call and put vertical spreads, you would have made over 400% in profit just in the last 6 months, going short when the sell signal is triggered and going long when the buy signal is triggered. I also post all of my investment ideas and trade ideas in real time, as well as every single trade and investment goes up in real time in my trades. There's also a members section where people can discuss the stock market, news, investment ideas, trading ideas. We also have a legendary trading room where our best members, our best legends, truly exceptional traders can share their trades in real time. We also have a futures section, a forex section, a crypto specific section, a Q&A section where any member can ask me anything and I'll do my best to answer everybody as fast and as best I can. And so far, everybody, in October, I'm so thankful that we've been so lucky to have done very well this month. October is infamous for being one of the hardest months to trade, and this is one of the hardest years to trade. 20 days in and we've had all winning trades, 0 losers, despite all the chop and uncertainty. Technical analysis works. You just have to give it time. Let's keep the legend alive. A big thank you to all of the amazing, incredible legends in this community. We are at 947 members, and I've set a cap at 1,000 members to be able to maintain the same level of quality, to be able to answer everybody's questions, attend to everybody's needs as best as I can. So the membership count will be capped at 1,000. So we've only got 53 memberships left. If you want to support the work that I do and get access to all of this cool stuff, please check out the link in the description. Again, it's $20 a month if you go for the annual membership. Despite the incredibly treacherous market conditions yesterday, we ended up making some very nice profits. Some of our members made over 60% in profit. Some made nearly 50%. Others made 30%, 8%, and 40%. We have some incredibly talented traders. All of you legends know exactly who you are. Congratulations. You did the work, you took the risk, and you made big profits. Congratulations. Now let's take a quick look at the different groups in the stock market. Utilities lagging again, 2% down. Industrials in the red, deep in the red. Leading was energy, tech, and communication services. So it's a bit of a weird mix, right? It's not a risk on, not a risk off mix. It's a very strange and tricky mix. And it looks the way it does because it was a risk on move at the beginning of the day and then it completely failed and fizzled out. Now the futures market is open, everybody. As of recording this video, the Nasdaq is down 0.7% and the S&P is down 0.5%. Again, there is this small double bottom formation, and I would not be surprised to see one last failed attempt at 368.5, a failure there and a continuation of the selling. We have this very obvious gap at $358, everybody, where we had a lot of choppy trading here in the past. A retracement to this level makes a lot of sense in many ways, including the fact that it will form an inverse head and shoulders, a very clean looking inverse head and shoulders that can be seen even on the daily chart. This is the left shoulder, this is the head, and this would be the right shoulder. Now, a full measured move on this inverse head and shoulders, everyone, would take the market up all the way to $400, which is my upside target for the S&P 500 by the end of the year, at the end of that highly anticipated November-December holiday rally. Whether this head and shoulders formation is successful or not will depend entirely on earnings next week. We have Amazon, Microsoft, Apple, really big names reporting earnings next week as we enter the most dangerous time of the year. And so I still remain very cautious as we enter the most volatile and dangerous time of the year. And as huge company earnings come out, the VIX remains very elevated, everyone. And so we have to be aware that one final crash, one final sell-off that takes us all the way down to $325 to the bottom of this consolidation zone that I've been tracking for months and months and months is very much still possible. In fact, a sell-off from the current levels all the way down to $325 would be about an 11% sell-off, and an 11% sell-off in a couple of weeks would no doubtly spike the VIX up significantly, potentially giving us that final capitulation bottom for the year. Definitely not the end of the bear market, but that bottom for the year, setting us up for that nice November-December holiday rally. Next year, however, I expect even more selling and for this bottom to be taking out as early as March. Now, to hedge against the possibility of this massive sell-off, I did open a very aggressive short position with a tiny amount of capital. The position stands to gain over 1,000% in the next 10 trading days if the market does end up giving us that final crash. Again, you'll find all the details of this trade and all of the trades that I make in the trading community. Check out the link in the description if you are interested. So yesterday in the pre-market, the dollar index reversal did alert us to this nice rally to the upside. But if you remember, everybody, in yesterday's video, I did warn that the smart money, the HYG, this chart was warning that weakness is coming because of a very subtle divergence that I spotted between the S&P 500, the dumb money, and the smart money, where the HYG firstly formed this abandoned baby structure. An abandoned baby candlestick structure, everybody, is when we get a candle, one full body candle above it, completely above the prior candle, and a complete reversal the next day with the body of the candle forming completely below the prior day, abandoning this candle, forming an abandoned baby candlestick structure. An abandoned baby, everybody, is an extremely bearish structure, and we saw that on the smart money as the smart money made a subtle divergence, closing on Wednesday below the close of Monday, while the S&P 500 closed slightly higher on Wednesday versus Monday. This was a bearish divergence where the smart money was considerably more negative than the dumb money in the stock market. The HYG continues to show significantly weaker price action than the S&P 500, and so more weakness is very likely again to fill that gap and form that inverse head and shoulders as we get into next week's earnings. Now let's take a look at the VIX, the volatility index up above, and the S&P 500 down below. Volatility has come down significantly since we put in that bottom on October 13th. And the VIX continues to trade below the 20-day moving average, which is a bullish sign. We do have this very obvious target to the downside on the VIX at 28.62. And so we could see the VIX retrace down here as the S&P 500 attempts that small rally to the upside from this double bottom going up to 368.5. And as it fails at this level, we could see the VIX again begin to move back up as the S&P 500 continues to sell to the downside. Now, for the entirety of the month of October, the VIX has been trading above 28.6, which is an extremely elevated level, and it will likely continue to trade at these very high levels as more earnings come out. Now, if Apple fails to deliver, if Microsoft fails to deliver, if Amazon fails to deliver or provide a weaker than expected forecast, that could very well end up being the trigger needed to initiate this one last massive flush down, this final crash of 2022. Now, let's take a look at the dollar index again, everyone, and look at this. We have this very subtle support line that we're tracking. The dollar index is now forming a pennant, and if it breaks to the upside, this will be very dangerous. It will likely trigger significant volatility and massive selling in the S&P 500. There's still a lot of white space left here as we enter, again, the most dangerous time of year. Next week, the dollar can easily rally all the way up next week to 116, at which point we might end up with that final double top formation on the dollar with a significantly lower high on the PPO. And if we see that and we see the S&P 500 selling off into that $330, $325 target, that will very likely mark the bottom for this year. Let's take a look at the 10-year yield, and the 10-year yield continues to push and push and push to the upside. We're now trading outside of this Bollinger Band. We have formed this ascending wedge structure, which is a negative structure. This structure tends to break to the downside, but we're not seeing that just yet. We formed a significantly higher high on the price action and a significantly lower high on the PPO, again indicating that a breakdown in the 10-year yield is potentially coming. However, if the dollar continues to push up, the 10-year yield will continue to rise in sympathy. Let's take a look at the 2-year yield, and the 2-year yield as well is forming this ascending wedge structure with a significantly lower high on the PPO, again indicating that a top could be coming in soon in the 2-year yield. And we absolutely categorically need the 2-year yield to top for any meaningful rally in the S&P 500 to develop. Let's take a look at the CPC put to call buy and sell signal. The buy signal that was triggered just a couple of weeks ago continues to be active. That, however, does not rule out more choppiness, more volatility, and one potential final sell-off. So in the medium term, going into November and December, this buy signal continues to be active, and the technicals continue to be bullish for the medium term, not the short term, the medium term. In fact, if we take a look at the weekly chart for the S&P 500, everyone, we do have a lower low on the price action and a higher low on the PPO, which is typical of a stock market bottom. We also have this trusty chart, everyone. The green and red is the XLU divided by the SPY, the utilities, the S&P 500 utilities ETF divided by the S&P 500. The blue and black is the S&P 500, and I just wanted to point out this on the monthly chart. When this ratio collapses and closes below the 9-month moving average, it very often marks the stock market bottom. In fact, if we take a look at 2008, the last bear market, the breakdown happened as the stock market made its bottom. Let's take a look at another critical chart, and it's this up top, everyone, is the percent of S&P 500 stocks trading above their 200-day moving average, and we have this monstrous bullish divergence. The last time we saw anything like this, you'd have to go back 6 years to 2016, right after the stock market bottomed, to find the same signal. It does not mean that the stock market can't continue to sell off and form a lower low as this ratio continues to form a higher low. It just indicates that we are extremely close to a stock market bottom. This was the last time this signal was triggered, everyone, and the S&P 500 made a lower low on a closing basis as this ratio made a higher low on a closing basis, and it marked the stock market bottom. From this point on, the market rallied 15% in the next 45 days. So in summary, in the short term, we continue to be extremely cautious as we enter the most dangerous time of the year, and as we start to see some bearish developments in the smaller time frames in the short term. In the medium and the long term, we are likely forming the bottom for the year and the next couple of weeks. And we very likely have some exceptionally good upside in November and December. Now, Snapchat did report earnings yesterday after the market closed, and the stock saw 25% of its value evaporate in a matter of minutes. And if Snap is any indication of what's to come from Google and Meta, I'd be very, very cautious. But based on what we've seen in the past, everyone, Snapchat does not tend to be an accurate leading indicator of the broader advertising market, because Google and Meta did pretty well despite a massive miss from Snapchat a couple of quarters back. Friday, we do have American Express reporting and Schlumberger. American Express will be a bellwether for any slowdown in consumer spending, or the opposite, an acceleration of consumer spending and potentially an acceleration of inflation, which would be massively, massively bearish for the stock market. So keep a very close eye on American Express earnings before the market open. In terms of the economic calendar, we do have Fed Williams speaking today, but nothing much else happening. Next week, the economic calendar is not really that important. We do have some data coming out, including housing data, services PMI, and GDP growth on Thursday, but all eyes will be on big company earnings on Apple, Microsoft, Amazon, etc. That's all I have for you today, guys. Thank you so much for watching, and I'll catch you in the next one. Bye-bye.
Oh, wow.